Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back KS family. Let's run the numbers. Bitcoin currently down 8.27% to 36,398. Ethereum down 6.33% to 2745. From my 30 plus years in financial market, I explained the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. We can see that the market has gone really red. Now what is this about? I'd just like to let you know that I've left helpful links in the description of this video. You can reach out and directly message me on Twitter at any stage. And we have links for the CryptoTradingKS Masterclass, our NFTs, different software that I use, and also some really good spot exchanges. I do not recommend that you ever leverage trade. So why is the market so red at the moment? Actually, we saw and witnessed a spike up in the VIX. It actually hit that resistance line and then it backed away. And we can see the Nasdaq came down and now backing away from that bottom as well. What generally happens, and it doesn't always happen, but this is something to be very aware of. The markets, when actual institutions know which way the market is headed, they will push it in one direction, then push it in another direction. That's why we always have that three-way philosophy. We understand what we're going to do if the market's going in our favor, go against us, or go sideways. That's the professional smart money mindset. I see this move as nothing more than a technical violation. It's designed to shake people out. And a lot of people inside markets, perhaps 95% of those, invest from an emotional perspective and trade from an emotional perspective. And the institutions know this, and the institutions will wreck your emotions. They'll burn them out of you, basically. And all professionals have had their emotions burnt out of them by the institutions. Thank you, institutions. And what we see with bond prices, they are continuing to fall. Bond yields are continuing to rise. This must normalize at some stage because things are out of whack inside the market. When things are out of whack, when they're not synchronized, that's not good for the markets. They need to come back into synchronization. What have we seen here? That gold actually decayed down, but it's still above resistance. We've been talking quite a while about the US dollar currency index and saying it was hitting a massive level of resistance and probably would retrace. It started to do that. It looked like oil had a bullish bias. It's now confirmed that. It's on the way up. And the put-call ratio, basically what we're looking at here, a lot of puts or bearish positions in the market are being placed. One thing to always bear in mind, the institutions and smart money know that the herd is usually wrong. And so whenever we see things like this, we say, oh, this is good. Markets are about to turn around. Let's have a look at how the Nasdaq's directional bias is impacting Bitcoin at the moment. And we can see the Nasdaq rallied up and then sold off. It's just finding a local bottom in reality. But what did that do to crypto? It pulled it down as well. That's why it's important to remember Rule 225. Bitcoin cannot escape the stock market's gravity. A lot of people are really scared about this large drop that happened in the past trading session. We have to contextualize this. How big a drop was it actually, and has it occurred beforehand? And what is the focus of this? When we can see large drops, this particular area from 37,164 down, let me just raise that up a little bit so you can see better, 37,164 down to 32,332. This is a high support area. We've actually encountered this high support area once, twice, and now 3 times. We can always buy lower, and this is one of our rules. I see this as nothing more than a technical violation. Basically, the institutions know that the Fed will not go really hard on increasing rates. It's not going to do 75 basis point increases, which was really worrying people. It will go 50, but it will not go 75. It's ruled that out. And especially with what's happened overnight. And what we can see here, the institutions do a technical violation. Basically, they're hunting all the long stops and they're trying to pull the shorts into the market. When we look at this past behavior, calling in the shorts, we've seen that the shorts were actually exiting the market. The institutions didn't want that. They want the shorts to come back in because they unfortunately want to liquidate them. That's why if you do leverage trading, it's really dangerous, because institutions with a lot of money will play with your portfolio and they don't play well. And the shorts are looking at it and saying, well, this is looking pretty good. I think I'll get into the market. But what are the longs doing? The longs are basically saying, yeah, it's okay. We're still highly confident that the market is going in the right direction. Just be aware of how the longs and the shorts interplay with each other. To get an understanding of that, let's look at total liquidations. Over the past 24 hours, there's been 408.35 million in total liquidations across 104,683 positions. And when we look over the past 24 hours, about 83% of total liquidations have been long. What about the past 12 hours? Nearly 87% were long liquidations. What about the past 4 hours? 77.3%. What about the past hour? 62.5%. You can see that doesn't matter if you're long or if you're short, you could get taken out of the market. That's why we say, friends, don't let friends leverage trade, because it's a devastating thing to do. And we can see there's been a lot of long liquidations recently. People were absolutely certain that the markets were going to go up, and we know from our rules that protect us, there is no certainty, especially inside the crypto market. But unfortunately, these people lost combined around 408 million. It's a real tragedy, but that is the thing with leverage trading. That's why I always suggest, please buy at spot. When you buy at spot, you can hold on through turbulence. When you buy under leverage, you'll get your position liquidated if it hits certain markers. A lot of people see this red in the market and they say, whoa, I've got it wrong. I need to get out of the market. But the truth is, there's a lot of support through this 37164 to the 32332, and there's even support below that all the way down to 29528. Please be aware that there is always the possibility that we were going to spike down here on a technical violation. One critical thing to always keep inside your awareness, in the crypto market, the institutions hunt stop levels. Many stops were placed, and basically the institutions came in and liquidated that particular party. It liquidates longs and it liquidates shorts. It doesn't care who it liquidates, so long as they're leveraged. You can see on days like today why it's so important to do that three-way decision-making process. In your mind yesterday, what did you actually decide if it came down like it's just come down now? Please let me know in the comments. It's really important not to make an intellectual decision, but to make a practical one. This is really helpful to you to reinforce these kind of concepts. They're smart money concepts. Smart money knows at any stage the market may absolutely turn against a position, and we counter for it. However, in zones 1 and zones 2, people want certainty. They make one-way decision-making processes, and they say, oh, I'm aware if it goes down, but that won't happen. Everything will be fine. Or they can say it's going down, it won't go up, and then it goes up, and they say, wow, I didn't see that coming. What you have to do at all times is make those three-way decisions. That's what we do in Zone 3 and Zone 4. We rely on probability and rules, but especially knowledge and skills. In Zone 1 and Zone 2, it's kind of like a casino. People want the participation award, and when things don't go well, they get really angry. And that is understandable. And the most important thing to know is that all professional investors and traders actually went through the panic zone and the blame zone to start with. It's nothing new. We all go through it. The unfortunate thing was before I actually developed KS zone analysis, people didn't know about these zones and they were constantly trying to figure out, why am I losing money? Why am I buying at the top and selling at the bottom? It's because the market makers want you to do that, and they feed a constant stream of disinformation and also false rules to the general public. I'm trying to do something different. I'm trying to uncover those rules for you so that you can look at the market and it can be a financial blessing to you and you can sleep well at night. Even on days like today when the market is quite down, it should be a very, very exciting thing if you've got your mind correct. If your mind is correct in Zone 3 and Zone 4, you're actually looking forward to this red momentum because you know what it means. But what actually does it mean? It's all about Rule 359. Be on the right side of the percentage. When the actual market moves down, and it moves down fiercely, you get put on the right side of the percentage if you are participating. And this is really important. Something can come down 50%, the 10-5-10 rule, the volatility fund. And if it comes down 50%, you're just there waiting for it. And it's not about the market coming down 50%. It's about the concept of what a percentage actually means. If you have $10 and it goes to $5, you lost 50%. But if it retains its value, goes back to the $10, you break even. But in truth, from 5 to 10 is 100% gain. This is critically important to understand. I'll give you an example, something practical. If you are in a market like this and you saw the price coming up, and then what does it do? It comes up and up and up and up. What do? You're feeling pretty confident about this. Under conventional technical analysis, it's bypassed a level of resistance. It's on its way up. It's being well supported. And then what happens? It keeps on going up. Oh, this is looking great. All in and more. People are really, really going for it. Now what happens next? We violate some lines and then it starts to come down. What do we do at this particular level where it's literally dropped off a cliff? Do we run for the hills and say, I'm out, I give up? Or do we lean into it? Please let me know in the comments what you would do. This will dictate how professional you can become. And it's really only knowledge. When you have the knowledge, everything changes. So let's just look at what this percentage is. If we look at this percentage, Bitcoin came down at this particular point, 63.98%. As it's doing this kind of capitulation, all the professional investors and traders would be licking their lips saying, wow, I'm in, this is awesome. But why would they do that? Isn't that crazy? Let's take the price action forward a little bit. Now what do we see? A lot of wobbling around. And then, over time, we can see things starting to get better. Now, let's just take this local point from this bottom and see what is actually happening in percentage terms. We can see that the market from that point to that point, and it's not even a full recovery, you'll notice this gap here, it came up 165.35%. And this is what financial markets do all the time, and crypto especially. Crypto is a really, really fast moving market. You can see that this particular downturn actually occurred over just about 29 days, and just about double that time it pretty much came back and recovered. Didn't recover fully, but the concept is it came up 165.35%. What happens is the retail investors and traders, they sell on red and they buy on green, and that is the hallmark of retail thinking. When things are going really, really well, people get excited. They're all in and more. And that's pushed by the media. It's pushed by retail influencers everywhere. And it's the best way to blow up your account. It's really important that you realize that there are some influencers that are retail and some that are smart money, and the difference between them is literally night and day. If you're being told to buy on green, you've got a problem. And if you're being told to sell on red, you've also got a problem. Selling on red is just the worst thing anybody could possibly do. And of course, if you're under leverage, you don't even have a choice because they'll automatically close out your positions. But if you're under spot and you can accumulate as price goes down, and remember, price is always negatively biased. What that means is price prefers to go down. Why does it prefer to go down? It prefers it because smart money wants it to go down. Why does smart money want it to go down? Because of these percentages. Smart money understands that you must be on the right side of the percentage. Being on the right side of the trade will typically get you wrecked. Being on the right side of the percentage will make you more of a financial blessing to yourself and those you love. Instead of worrying about crashes, embrace them. Instead of being fearful, be courageous. But above all, Rule 219, be kind to yourself. When you know better, you can do better. And it's not your fault. When you have retail influencers out there pushing the hope cycle, hope, optimism, thrill, euphoria, and who doesn't love that guy? He's so cute. Anxiety, denial, panic. I think a lot of people are in panic at the moment. And this is not the way smart money thinks. Smart money thinks the exact opposite of this. They're always cool. Hey, he's such a cool little dude, isn't he? They're professional. They're zone 3 and zone 4. They subscribe to positive excellence. They're unemotional. They look at the market and they don't say, I'm not going to get optimistic or angry in denial. I'm not going to attack other people. I don't have anxiety. I don't have panic selling. I don't do any of that because I know the rules of the market. When you know the rules, you can play the game. And understanding percentages is really, really important, and BORSOGing is absolutely critical. If you don't buy on red, you're in trouble because the percentage is already against you. Please let me know in the comments what you think about the emotional side of trading and investing. And all investors become traders anytime they buy or sell. There are different mindsets behind buying and selling, but everybody buys and everybody sells. It's important not to pigeonhole yourself because you will shut down certain parts of your mind. For example, if a trader says, I'm not an investor, why shouldn't you be an investor? If an investor says, I'm not a trader, why shouldn't you be a trader? Why can't you be everything that you can possibly be? A very kind community member reached out and shared a trade with me, and I'm just going to take you through it. This is on Tron. Now, when you see Tron coming down and going up, coming down and going up, this is what faced this particular investor/trader. And we know all investors become traders anytime they buy or sell. So I like to say investors are really traders and traders are really investors. Everybody's just an investator. So let's play this out a little bit. The particular person, the beloved community member, just entered when price was around here, and then it started to go down. Whoops, and then it started to go up and up and down and up and down and up. You get the idea. Now let's have a look how this beloved community member actually went. The first thing we do is look at the trading history. For this particular person, they bought on the 30th and then on the 1st, and $100 per level. One thing I would like for everybody to keep in mind, what you do when you know the rules of the market, you can just scale. It doesn't matter if this is $10, $50, $100, $1,000, $10,000, $100,000. It's whatever that crypto will actually take in terms of liquidity. But just bear this in mind, $100 could easily be $10,000 in this case, or it could easily be $10 in this case. It doesn't matter so long as you're learning the process. And we can also see that the sell was on the 4th. So buying on the 30th and the 1st, and a sell on the 4th. Now, if we add up these numbers, both for the buy side and the sell side, what does it come to? I've magically just prepared it for you earlier. There you go. That's what we're looking at. Now, where are these positions? We can see the 30th and the 1st. So these red lines. And it's not as easy as a lot of people think. You need a lot of knowledge to be able to BORSOG correctly. And then you saw the price going up and down, up and down, and up and down. This particular beloved community member sold at this particular price. And you can see 7798. That's why I always need the trading history. We are very, very open and transparent. And I do this with all my examples in the masterclass as well. And we can see 6367, 6367, and 6379, these two. Now, what we actually notice about this particular trade, it's a really good trade. And we can see a couple of important things. The price came down a little bit further. Zone 1 and Zone 2 would say, you missed the bottom. How come you didn't buy at that tip on the bottom? Professionals Zone 3 and Zone 4 never think that way. And other Zone 1 and Zone 2 people would say, you missed the top. You should feel so bad. You could have got extra profit here and extra profit here. Oh, that's not a very good trade. That's a bad trade. Bad trade, naughty trade. No, it's a really great trade because we don't care about tops either. And what was actually happening here, this took place in about 4 days. But why don't we care? Why don't we care about those bottoms? We missed the bottom. We shouldn't have gone in. Let's wait for another month for it to come down. Or we missed the top. That's really bad. We don't care about any of those things because what we care about is something else. What we care about is hitting a specified return on investment. Remember, it's not about price, it's about percentage. And when you look at this particular time, if we manage to just keep on doing this and doing this, the annual percent return is just so insane. I wouldn't even be bothered reading it out because it's unrealistic. But it gives you an understanding, and a really powerful one, that a lot of people don't have. When you look at price action like this, if you know how to buy correctly and know how to sell correctly, you can do incredibly well over time. But don't worry about retiring or making $1 billion. That is the wrong way to look at this. Get your knowledge correct. Get your processes correct. Know how to mark up your charts. Know how to read the market. It's all about knowledge. There's no gambling and no luck when it comes to long-term sustainability and profitability. One thing that I would always recommend to everyone, whenever you do your trade, and the trade is just buying and selling, because we know all investors become traders anytime they buy or sell, to crack out of that investor mindset is really, really important. And to crack out of that trader mindset is really important. You are both. You're not one. Do not limit yourself. Be an unlimited individual. And don't worry about the money that you put in. Putting in less money to get the process right, to learn. What do you learn from this? How do you do better next time? They're all things that you can actually just participate with a small amount of money. And this is really good. To some people, this is a huge amount of money. And if it's a huge amount of money, put less in. Make sure that your fees don't actually bite your profits too much. But that's the other side of things. What you need to do is just participate in the market. A lot of people say, Ken, I've done paper trading. I would suggest paper trading is an absolute and utter waste of time. Paper trading is unemotional. It's not your money. You don't care. You don't care if you make money, and you don't care if you lose it, because it's not real. As soon as you put $1 into the market, then you care. That's why I would always suggest start small and scale. Well done to this beloved community member. And thank you for reaching out and absolutely sharing this trade. It's really, really nice of you. And there's so many other community members who have done the same thing. I will be sharing these trades from time to time. So thank you for everyone that's shared. I just want to share something with you because I think it will help a lot of people. When we zoom in to price action like this, if you sell at a particular level and it just keeps on going up, don't worry about it, because we've already found the next targets for our attention, and you can always cycle in and cycle out of trades as well. The other thing, when you actually don't sell and you just keep on getting greedier and greedier, you'll end up chasing things down and probably sell around the bottom, because that's generally what emotion does to you. Emotion is not your friend inside the markets. It is your absolute number one enemy. This is why I always say Rule 570 is the test. Your psychology will set your profitability. If your psychology is emotional, if it's up and down, your profitability will be at least 10% of what it could be. I would say 1% of what it could be realistically. Psychology is incredibly important, and learning the smart money mindset is absolutely, utterly vital. That professional mindset, that smart money mindset about mastery of emotional control, you can see why it's so important to come before the trigger section. If you don't have your head straight, if you let your emotions rule you, you will lose money. It's just guaranteed. That's why in the masterclass, real wealth comes before the trigger section. And a lot of people say, Ken, real wealth, mumbo jumbo, I don't care, I just want to buy and sell. You will not be profitable if you do so. If you don't have real wealth must be your focus. It's incredibly important. And the other thing to always consider is, why are you doing what you're doing? You want money, absolutely. Why do you want money? Because you want security, you want the nice things in life, you want to feel safe. Why do you want those things? Because you want to be happy. Isn't your goal to be in the market to be happy? You can have that straight away with the right attitude. I talk a lot about real wealth, but I think there's nothing better than hearing from people who have actually experienced inside the masterclass, the real wealth section. If we just look through some of these, I'll just cherry pick. I needed to invest in our future. Ken has shown my family a path out of this and back into real wealth. Thank you, my friend. As I've said before, the real wealth section alone was more than worth the price of admission. And the problem is that school systems don't teach people about real wealth. And because they don't teach people about real wealth, it's a really, really problematic thing, because we have generally negative attitudes towards money and wealth. My outlook on crypto, this is from Warren. Thank you, Warren. My outlook on crypto, real wealth, and myself has grown immeasurably since I started following your videos, and since I have started working through your masterclass. I wanted to say that you have also had such a positive effect on my son. Now, how much do you think a proud and loving dad appreciates that? That's so beautiful, Warren. And we can see that many, many families have shared the real wealth with their children, and that's wonderful. That's what I really want to see. And from Badger, the real wealth section, Badger in this particular statement that he wrote was comparing the masterclass, building up all the different levels. It's a really, really good thing to read. The real wealth section is what really turns the house of knowledge into a home. I think we should seriously advocate for real wealth philosophy to be taught in schools. If young people were taught about abundance and all of the hidden rules that govern money, the world would become a much better place. Thank you, Badger. And if you'd like to go through, you'll find many feedbacks in here, and it's just beautiful. I want to thank everybody so much for reaching out and sharing. This masterclass, will be a one-stop shop to acquire the crypto technical analysis skill to make money, and most importantly, the real wealth knowledge to keep and pass the wealth to intergeneration. This is really beautiful because that's our focus. It's not just about being more of a financial blessing to ourselves, but having the prosperity to be a financial blessing to others, and especially those that we love. I'd also like to thank Nick. The real wealth teaching will now be intergenerational in my family. It's very important to understand real wealth and a positive excellence life trend. I believe that the only way to get out of Zone 1 and Zone 2 is to understand real wealth, and when people do, they find the real wealth perspective being priceless. Thank you, Pedro, for that. And you can see there's a lot of comments in here. If you want to go through and to read some of these, that's a very nice thing to do. It'll give you a perspective. And I would also urge you to actually play the video about why I created the masterclass. I did so for very specific reasons. Let's have a look at the top performers over the past 7 days. Tron still out in front, up 17.36%. ANC up nearly 9%. CRV coming up to 2.5%. RNDR up about 1.5%, and then the rest are going negative. What a difference a day makes. What we saw yesterday is everything bolting, but just always keep in mind the alts cannot escape Bitcoin's gravity. So as Bitcoin comes down, the entire crypto market will come down with it. That's why we spend so much time looking at Bitcoin and trying to understand what it's doing. What do we see with the top 20 cryptos? We can see Tron out in front, TRX, followed by Doge, BNB, Ethereum, Luna, Litecoin, and then Bitcoin. Let's have a look at how price action actually played out with our ABC. Remember that the C lower boundary was that support line at 36,393. It's fascinating that actual price really tanked, hit a support level, slowed down, hit this another support level, went below it, came back to it, magnetized back to it, and it's just hovering around there now. So to all the people that said C yesterday, congratulations. Just one thing to bear in mind, we're in a high support zone. That means that buyers in the past have come through and actually bought inside this zone. As I showed earlier, just keep that in your mind. Okay, so where does everybody think the price is going to go from here? Do we think that we're going to go up to the A zone, to the B zone, stay inside pretty much that C zone, or go down, for example, to the D zone? And you note that I've set a lower limit on this at 34,370. Let me know in the comments, like we do every day. This is really good for your sensory acuity when it comes to the market. You can look at the market and say, okay, what do I learn? And our community is very loving and kind. We don't judge anyone, and we certainly don't say anyone is wrong. That's Zone 1 and Zone 2 thinking. We just don't do that. We're not interested. Everybody's opinion is valid. Up, down, left, right, it doesn't matter. It's valid. And to all the members of the community who are reaching out and saying hi, it's just so wonderful to see you. Please keep on doing that. I just love saying hi to people that have been watching and have not reached out previously. So that's just a wonderful thing to do. It's your family after all. Come and say hi. I've just updated our A, B, C, D boxes. So what do you think? Is it coming into the C zone? Is it coming into the B zone, or up to the A zone, or down to the D zone? Please let me know. Let's have a look at our top cryptos. We understand Bitcoin's nature very well. Getting this spike down, I believe, is just like a spike like this. It's just the institutions wanting to do a bit of a rug pull on people. But this is a great time to get in because these sharp angles tend to reflect. And we know, even if it keeps on going down, it's just putting the percentage on the right side for us. But always have your three strategies in your mind. What happens if it absolutely starts to rally? These are really important things that you need to think and decide your course of action on. Let's have a look at Bitcoin's fingerprint playing out against the alts. We can see Ethereum obeying Bitcoin's fingerprint, Binance Coin doing the same, XRP doing the same, but it's looking a little bit stronger here. It's good news for XRP. We can see ADA consolidating around that low level after quite a beautiful spike up. We can see Solana is coming down. Let's see if that level was hit. I just zoomed in there. We just missed that 81.01 level. This is why we're always setting lower prices, because we just leave these orders inside the market waiting for them to hit, and then we set, when we get a fill, we just set the exit point as in line with what kind of return that we want, understanding that higher returns take more time. We can see Luna doing really well. It's holding up very strongly, and we can see the spike that happened in AVAX has retraced, but this is quite common. This is crypto. This is what crypto does. Looking through some more community favorites, we see Theta just following Bitcoin's gravity, as is T-Fuel. Doge is following Bitcoin's gravity, as is EGLD. We can see Phantom has sold down. And when we get these spikes, they're really interesting, but you have to know when to get in and when to get out. CHR, consolidating along a support line, not looking too bad. LRC is looking actually really good. It's hit support several times, and it's above this level of support. So all in all, it's looking quite good. And when we look at Atom is just following Bitcoin's gravity. NEAR is moving in a wave. NEAR goes far, but wherever it is, it's going quite nicely as well. Having a look at Matic is just retracing in alignment with Bitcoin's gravity. We've already seen how the gravitational pull of Bitcoin absolutely impacts the crypto market. What happened to your beloved alt? Let's have a look at Icon. Icon is just consolidating. What happened to Icon? Bitcoin happened. What about Veracity? What happened to Veracity? Did some fundamental change? No, Bitcoin happened. Let's have a look at Rose. Rose is just following Bitcoin's gravity down. Rune is looking stronger. What about IOTA? What happened to IOTA? Bitcoin happened to IOTA. What about IOTEX? Again, Bitcoin happened. If you understand these things, you will definitely be more of a financial blessing to yourself and those you love, because you'll understand how the market actually works. Please let me know in the comments, how do you approach your decision making? For example, if you think today that the market will go down, yesterday the market was absolutely rallying. The positive expectations were that it would keep on going, but we saw a dramatic sell-off. What happens if we see a dramatic rise in the next session? What will you do? Or if it's a dramatic fall, what will you do? Having a discussion about your thought process in this is really important, because it can help you consolidate your strategies. Please let me know in the comments. Rule 734 is incredibly important on today and days like today. Master emotional control. You cannot be a professional without emotional control. What do you think of this particular rule? It's quite hard to reach, but when you understand the rules of how to get there, it becomes much easier. we can find that emotion can control us just from a subconscious level. But when you understand that your emotion is wrecking your bank account, it becomes something important to manage more effectively. Let's have a quick look through the Metaverse plays. We can see SAN just coming down, it's retracing, and we can see Axie doing the same thing. All of these particular cryptos will follow Bitcoin's gravity. What are we seeing with Decentraland coming down, Gala coming down, Engine Coin coming down? Let's have a look at Ape. What's Ape up to? If we have a look at Ape, we can see that Ape was performing really well. It was going absolutely parabolic. And then we said, be careful. What happens? Price is always moving in a wave. It's going up and down and up and down. And I said, just be prepared for this kind of drop, this 60% drop, and you'll be fine. And what have we seen? We're actually getting close to that drop. But what does it mean from a probability perspective point of view? If something comes down 57.59%, if it just retraces up to that original point where it came down from, it goes up 135.36%. Please bear in mind these probabilities, these percentages, they're really important, and they are game changers. But you need a lot of knowledge, and we share that inside the CryptoTradingKS Masterclass. When we have a look at Chili's, it's just following Bitcoin's gravity, as is SLP. Just on this particular group of 8, KDA, CRV, Waves, AR, ZIL, Cello, GMT, ANC, I see some really interesting things in these charts. Please have a look through these charts and let me know if you see anything interesting. And if you were to actually trade one of these, trading just means that you put dollar cost averaging lines down where you place buy orders. Which one would it be? And just say you can only pick one. I'm not suggesting you pick one and put money on it. I'm just saying it's really important to train your eye to pick up various signals, because we look at so many charts day in, day out, 7 days a week. We are very much advanced on a lot of other people that just tend to limit their focus on one or two things. On days like today, you may feel really down and you can see the market is quite red. If you have that professional smart money mindset, you can see things differently, and seeing things differently can be a gateway to a completely new life, and life is always waiting for you to be ready for abundance. It is out there. It's your birthright. You can take it, but you just need to know the rules and have the knowledge. I hope you found the content useful. Please consider sharing and liking this video and subscribing to the channel. We would love to have you as part of our globally extended KS family. Thank you very much to our moderators for keeping our community safe from scammers, and to the CTKS ambassadors. Look, Banana is coming up. For mentoring masterclass students, and we know why Mate is coming up. It's trying to clean up that banana. And of course, a very big thank you to you for watching and for being part of our global KS family. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video, such as the CryptoTradingKS Masterclass, and you can always reach out and directly message me on Twitter as well. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.